The branch manager smiled when he said it. "Mr. Carver, we can't process a withdrawal for $3. Minimum transaction is $25. Raymond Carver stood at the counter, 72 years old, plaid shirt tucked in. He looked at the manager, then at the teller, then back. "I'd like my $3. The smile didn't move. "Sir, it's bank policy. Has been for 18 months now. If you'd like to close the account entirely, we can accommodate that." Raymond set his withdrawal slip on the counter, turned, walked out. He'd been banking there for 47 years. Raymond Allen Carver, born in Holt County, Nebraska, 1954. Bought his first 80 acres in 1979 with money saved from working harvest crews across 3 states. No inheritance, no family land, just a deposit slip and a handshake with a farmer who was selling out. He worked those 80 acres alone for 6 years before he could afford to marry. Another 4 before the first good year let him breathe. By 1995, he owned the land outright, paid in full, title clear. He banked at First Prairie Federal in O'Neill. Same branch, same building. Opened his account in May of 1979 with $340. Everything left after the down payment. Account number 003492. He still had the receipt. His wife, Lenore, passed in 2021, lung cancer. She'd kept every bank statement they'd ever received, filed them by year in metal boxes she labeled herself in blue ink. The boxes were stacked in the basement, 4 deep, organized by decade. Raymond's land sat along the Elkhorn River, 80 acres of creek-fed pasture and timber. 1 barn his father-in-law helped him build in 1987. 1 oak tree older than the state itself. He was the kind of man who paid every bill the day it arrived, who kept his receipts, who trusted that if you did things right, the system would protect you. He believed that for 47 years. Derek Howell, 34 years old, MBA from the University of Denver, promoted to branch manager at First Prairie Federal in November 2024. His 3rd branch in 4 years, corporate fast track, efficiency metrics, quarterly bonuses tied to cost reduction and account minimums. He implemented the $25 minimum transaction policy in January 2025, sent an email to account holders. Most didn't read it. Those who did assumed it didn't apply to them. Derek's internal performance review from March 2026 noted he had streamlined 47 legacy accounts in his first 4 months. Legacy accounts meant customers over 65 with low balances who generated minimal fee revenue. Raymond's account balance on May 1st, 2026, $1,450. 83. He'd come in to withdraw $3 to buy stamps at the post office. He always withdrew exact amounts, always in person, never used the ATM. Derek spent 6 minutes reviewing Raymond's account after he left. 6 minutes to decide the old man wasn't worth the exception. He flagged the account for review, sent it up the chain with a recommendation: enforce policy strictly or encourage closure. Raymond had been customer 003492 for 47 years. Derek had been branch manager for 6 months. Raymond didn't go back to the bank for 2 weeks. On May 15th, he received a letter. Certified mail. First Prairie Federal letterhead. 4 paragraphs. The bank was implementing new account maintenance standards. Effective June 1st, accounts below $2,500 would incur a monthly service fee of $15. Accounts with fewer than 2 transactions per month would incur an additional inactivity fee of $10. Customers were encouraged to consolidate accounts or consider closure if the new structure did not meet their needs. Raymond read it twice, set it on the kitchen table, looked out the window toward the barn. Lenore would have known what to do. She always handled the paperwork battles, medical billing, insurance disputes, the time the county tried to reassess their property taxes in 2003. She'd fought it with a box of receipts and a map from 1891. He walked downstairs to the basement. 4 metal boxes, blue ink labels, 1979 to 1989, 1990 to 1999, 2000 to 2009, 2010 to 2021. He opened the first box. May 1979, account opening receipt, deposit slip, first statement, balance, $340. He kept reading. Raymond called a lawyer on May 18th, Nathan Cross, 52 years old, Practiced in O'Neill for 26 years. Handled wills, land disputes, estate planning. Not a fighter, a filer. Raymond sat across from him with a folder. Thin, 4 pages. "They won't let me withdraw $3, Raymond said. Nathan looked at him. "They can set minimums. It's legal." "I know, but they didn't always have them." "Policies change." Raymond set the folder on the desk. "I want you to look at something." Nathan opened it. Inside, a photocopy of Raymond's original account agreement from 1979, signed by Raymond, signed by the branch manager at the time, a man named Eugene Pitts. 2 pages, standard boilerplate, except for one clause. Page 2, Section 7, subsection C. Account holder retains full access to deposited funds without restriction, minimum balance requirement, or withdrawal limitation for the life of the account, subject only to federal regulation and account holder request. Nathan read it once, then again, slower. "Where'd you get this?" "My wife kept everything." Nathan leaned back. "This is from 1979. "Yes. Banks change terms all the time. You would have signed something later that replaced this." Raymond shook his head. "Lenore checked every year. We never signed anything new. I asked at the branch once in '93 when they remodeled. They said the account was grandfathered, didn't need updating." Nathan set the paper down. "You're telling me you have an account with no withdrawal restrictions, in writing, signed by the bank, that's still active?" "Yes." "And they refused a $3 withdrawal?" "Yes." Nathan was quiet for a long time. "I need to make a call." Nathan didn't call the bank. He called the office of the comptroller of the currency, federal regulator, oversees national banks. He explained the situation to a compliance officer named Karen Dietrich. She asked him to send the 1979 agreement. He did. She called him back in 40 minutes. "If that agreement is valid and was never superseded, the bank is in breach, not just of contract, of federal consumer protection law. They can't unilaterally alter terms on a grandfathered account without notification and consent." "What do I file?" "You don't file, we do. Send me everything you have. Account number, copies of recent statements, the refusal, the new fee letter. I'll open an inquiry." Nathan called Raymond that afternoon. "Don't close the account. Don't sign anything. Let them keep sending letters." Raymond asked why. "Because every letter they send makes it worse for them." On May 22nd, First Prairie Federal received a letter from the OCC. Subject, Regulatory Inquiry. Account number 003492. The letter requested all documentation related to Raymond Carver's account. Original agreements, any amendments, communications, policy changes, fee schedules. It requested a written response within 14 business days. Derek Howell forwarded it to Regional Legal. Regional Legal forwarded it to Corporate. Corporate forwarded it to Outside Counsel. Outside Counsel opened the file. Read the 1979 agreement. Read the new fee letter. Read the withdrawal refusal documented in the branch transaction log. They called corporate compliance at 9:47 a.m. on May 24th. The call lasted 4 minutes. At 11:15 a.m., First Prairie Federal's Chief Compliance Officer called Nathan Cross directly. "We'd like to resolve this matter." Nathan said nothing. "We're prepared to waive all fees on Mr. Carver's account in perpetuity, restore full withdrawal access, provide a written apology." "What else?" Silence. "Mr. Cross, we believe that addresses the issue. You refused a 72-year-old man a $3 withdrawal. You sent him a letter threatening fees after 47 years of perfect standing. You violated a signed agreement and federal law. What else are you offering?" The compliance officer hesitated. "What are you asking for?" "Compensatory damages, policy violations, emotional distress. And I want it in writing that no one at First Prairie Federal will ever contact Mr. Carver about account minimums, fees, or closures again. Ever. We'll need to discuss internally. You have 48 hours. Nathan hung up. The settlement letter arrived on May 28th, signed by First Prairie Federal's president and general counsel. $85,000, paid in full, no admission of liability. Confidentiality clause waived at Nathan's insistence. Account number 003492 restored to unrestricted status. All fees permanently waived. Written confirmation that the 1979 agreement would remain in effect for the life of the account. Raymond read the letter in Nathan's office, set it down, looked out the window. 85,000. Yes. For $3. For 47 years. Raymond was quiet. Nathan slid a second page across the desk. There's one more thing. The OCC opened a broader investigation. Turns out you weren't the only one. They found 11 other accounts across 3 branches with similar agreements, all from the late 70s and early 80s, all flagged under the new policy. Raymond looked up. They're contacting those account holders now. Your case opened the door. Raymond drove home alone. Same truck he'd driven for 18 years. Parked in front of the barn, sat there for a while. He walked down to the basement, opened the first metal box, 1979 to 1989. Pulled out the original deposit slip, $340, May 14th, 1979. He looked at Lenore's handwriting on the box label, blue ink, neat and deliberate. He refolded the settlement letter exactly the way it had been folded in the envelope, placed it in the box, underneath the 1979 agreement. Closed the lid, latched it. He walked back upstairs, put on his boots, went out to check the fence line along the creek. The system doesn't always win, but it always assumes you'll give up before you prove it wrong. Raymond didn't give up. Lenore made sure he didn't have to. If you've made it this far, you're exactly the kind of person this channel is for. Raymond wasn't the only one. There were 11 others. Same letters, same bank. What happened when they all walked in together changed everything. Subscribe so you don't miss it. Paste your script.